Welcome to the Cashflow Academy podcast. I'm your host, Andy Tanner. This is where investing is made simple. And today I'm joined by Corey Halliday.
Nice to be here.
Good to have you, Corey.
Thanks.
And also my good friend, Noah Davidson.
Hi, how's it going?
They let him out of the house today.
Yes, absolutely. Thrilled to be here.
No, it's going to be a lot of fun. Just remember, always, yourinvestingclass.com. If you haven't been there, go there. If you haven't been there in a while, go there. We'll change it from time to time. Always fun goodies. If you've never made money in stocks, or you've never received premium from options or protected your investment with options, go check some of that stuff out. You might find it's your cup of tea. So with that, let's talk. Let's bring up our topic. Oh, we need to introduce ourselves first. So let's start with Noah Davidson, a quick introduction if someone's new to the show.
Hi, I'm Noah Davidson. I like stocks and options and financial markets in general, investing in general. I've been a student of the market for the last 20 some odd years. Started back in the dot-com era and have taken every opportunity to get education over the years. And I've been a teacher of financial education. I've had tens of thousands of people come through my classroom, and it's been awesome to help them go from not knowing what they're doing to knowing what they're doing and doing it with confidence.
That was awesome.
Hi, thanks.
Yeah, home run. Corey Halliday, a little background, please.
So similar to Noah, I got started a couple of decades ago, and I kind of went the traditional route of getting licenses and worked my way up the ladder. Eventually became a Series 4 option principal, which is the head of option trading for a New York-based firm. Did that for a number of years. Retired 15 or so years ago and love teaching and investing and doing different things like this. So a lot of fun
stuff. So we got a great panel or discussion or whatever we are. And if people don't know who I am, I'm friends with Noah and Corey. That's my credential. I, too, been a student for a long, long time and spent a lot of time in the Rich Dad organization as the paper assets guy. So with that, let's talk about today's topic. A lot going on in the Middle East, and it's just rough. Man, what a humanitarian. You know, you think of the children over there on both sides of this thing, and it's like, when are we going to love our kids enough to spare them from these awful atrocities that go back and forth? But we're here to talk about how that affects financial markets. And, you know, there's concern that it can have an effect on oil. So why don't we start with Corey? What have you been reading? What have you been observing?
Yeah. I mean, it's interesting. If you think about your life, how many years out of your life have you spent without a war being had in the world? And it's probably zero. I think there's probably been some war somewhere, somebody fighting with someone pretty much your entire life. And so my guess is that for the rest of our life, that's going to be something we're going to be dealing with. So we need to think about that, because we need to take a step back and not always see the worst case scenario and think that every war is the end of, civilization or something like that. Like, we're dumb as human beings, but we tend to get through it as well and make better decisions eventually. So hopefully wars will, subside and cooler heads will prevail. And certainly the war in Israel and Iran is concerning. And you see some of those images and it's heartbreaking. We always look at it through the lens of the financial markets as well, and not just humanitarian. And obviously, from a financial markets perspective, we're talking about the Middle East, and oil always comes to mind. And I think Iran produces about 3% of oil supply. So it's not something where, Saudi Arabia and some of these other areas are much bigger producers, but certainly 3% is not nothing, and of that 3%, I think most of it, 80% goes to China, which is also interesting. So they're not supplying to the world. It's not a huge oil concern as much as it's just a humanitarian concern, I believe, at this point. Now, the question is always, will it evolve from there, right? You look at Russia, and they're still fighting in Ukraine. And, that's
We
another.
could argue that conflict is also about oil.
It is,
and
yeah.
control
And
of
natural
oil
gas.
and pipelines and ports
Yep.
and
Natural
gas.
Yeah.
And absolutely.
And I would say that's a bigger issue
Yeah.
than Iran and Israel from an oil perspective. But again, the question becomes, what's the evolution of this? Does China get involved? Does the U.S. have to step in at some point? That's what you worry about, is the dominoes. If there's more dominoes that fall and this evolves further, that's the biggest risk.
I'm no historian. They say history repeats itself, and I'm a very light amateur. I love history, particularly financial markets history. That stuff fascinates me.
Yeah.
But World War II, why did Japan decide to, go to Pearl Harbor? Well, from what I've read, and maybe history's been...
In the words of the Tin Man, oil.
You are killing me, dude. Well, I need a little scream.
Yeah. Give you a little...
It wasn't
freshen
oil
up.
you needed, it was grease. Yeah. Oil.
But no, that's certainly the purpose.
Yeah. So oil makes the world go round. It
Yeah.
really does. It's the big deal. So with that, let's talk a little bit about it. Opportunities with it. There's a lot of different ways to get exposure to oil. One of the things that I think is a poor long-term way to do it is, let's first talk about USO, because let's say someone, whether you want to short it or go long it or whatever, USO, I think we used to trade a lot of it years ago, Noah.
Yeah, pre-pandemic, USO was pretty solid, and then they did some tinkering with the ETF, and it just became less serviceable from a collecting premium standpoint, owning the asset type thing.
So to understand the USO is when you look at investments that are designed to track an index or a commodity like gold, silver, S&P, Russell 2000, there are some challenges with that. And generally, there's a lot of different baskets we could put them in, but we could put these maybe in two baskets and talk about today educationally. Is on the one hand, you have something like GLD, where the gold dealers will tell you that it's a complete conspiracy and it's horrible. Yeah. It's always the people selling physical that bash it, right? Yeah. But in reality, didn't Santelli, they put him blindfold. They put a blindfold on Santelli. Isn't that
CNBC, I think so. Rick Santelli.
Yeah, Rick Santelli or someone. They blindfold and put him in an unmarked car in a van and drove him to the vault.
To the gold. And
so then they had these people saying, well, I think that serial number on that brick I saw was off or whatever.
Yeah.
But... but basically I'm not a flat earth guy, and I think they do back it with gold. So they have to purchase and adjust the shares, and they have to keep it so it'll follow gold. And I think the GLD is going to be about 1/10 of the price of gold. And so if gold hits 2000, well, it's blown through 2000 an ounce. It's going to blow through $200.
That's right.
Is that fair to say?
Yeah.
The USO, here's your problem. It's kind of like my wife grew up on a dairy farm. So that's why she gets up early, and she can't get that out of her system. She's got to beat the sun up. And she remembers times where the supply of milk was so abundant that they'd actually have to dump the milk.
Yeah.
They couldn't sell it all. They would dump it.
It'll spoil, yeah.
It'll spoil. Now, oil lasts longer than milk does, but it spoils. So it's not like a gold brick that you can just put in a vault. This oil needs to be moved and shipped and bought and received and refined, and it's a lot more complicated than gold. So, Corey or Noah, either one, tell us a little bit about how the USO is different than the GLD in that you just can't buy oil and store it.
Yeah, it's anything that spoils, like Andy was talking about. You can't create a perfect ETF. You can't create a basket because you can't just set the oil there and have it backstopped, right? Because it will spoil. And so they utilize futures contracts. Well, the problem with that is that futures contracts trade in something called contango typically.
Tango? I'd love to.
Contango.
Contango.
I'd love
We've
to.
gone from Dancing Tin Man to contango.
Boy, I'd love
like
to.
Yeah. So contango or backwardation, but normal pricing is contango. And in a contango pricing, you assume that prices get more expensive over time. Well, that's how futures trade. Is let's say a barrel of oil in June is trading at 80. July might be trading at 81. August might be trading at 82. It gets more and more expensive over time. And so the USO is designed to hold those futures contracts, but then they have to, as they approach expiration, roll them out. And that means they have to sell what they own and buy a later dated. Well, what's the problem with that? If they sell a bunch of barrels of oil for 80 and then they go buy the same amount of barrels of oil for 82, they just bought fewer barrels because they couldn't afford as many, right? So they're losing every time they have to roll those contracts forward. They're losing a little bit. And it sounds like, well, like that can't be that big a deal. Well, it has a constant drag on the performance. So you're not getting the performance of oil. You're getting exactly the performance of oil minus all of those rolls. And by the end of the year, that could be 10%, 15%. It could be costly. In terms of the drag.
There are ETFs, and Noah, remind me of the one it's a leveraged one. I want to say it was like on the VIX or something. I can't remember what it was.
Well, there's like UVXY and VXX and some of those.
VXX, I think it might have been. I don't remember, but there was one that, I mean, I asked this question still today. Why wouldn't you just short it forever? Well, you have little spikes in it. That might give you a margin call or whatever. But over the long term, these are destined to be death. I mean, they're going to go to zero. And they'll do a reverse split over and over and over and over. Why aren't we just perpetually short those types of investments? I mean, what's your thought, Noah?
I have better places to put my money. That's all it comes down to is, you could probably figure out some way to arbitrage that or make some money off of it, but
rather own an asset.
But why get that complicated? I mean, there's simpler ways to make money on oil. I mean, you could hold ExxonMobil. It's been a while since I've done it, but I used to trade oil futures quite a bit. Just charting it technically and kind of following seasonal prices. And it's just it was easier for me to get my head around than looking at a complex ETF like the UVXY or the VXX or whichever one. I think it was the UVXY is the one I spent the most time looking at. And it just seemed to me like a tough horse to ride. I don't know. It like I say, I'd much rather just hold ExxonMobil.
What can you learn from the history of it? As I think about oil, I think of 2 or 3 events that I thought they're worth talking about. The first one is when oil went negative. And just think about that. I mean, this stuff goes from $100 a barrel to getting paid. And that's an interesting story because, people think, well, oil's never going to be free. And there's tapes of me saying that to my son on stage when he was like 6 years old. I says, hey, why don't we get some, exposure to this? Because, I don't think oil's going to be free, dude. And 10 years later,
oil is free.
Oil was worse than free.
They pay you
to take it off their hands.
I still have a couple barrels in my garage.
Well,
you got paid.
Needed your bathtub.
You got paid $35 a barrel to take it. So,
and the reason that happened, it's such a great study. The reason that happened and could happen again. So absolutely, now that it happened, you can see the mechanism. And I feel ignorant that I didn't see it before. So 15 years ago, when I said, "Hey, man, I don't think oil will ever be free," I actually didn't realize you wouldn't be able to go to the store and buy, you still have to pay for a quart of oil to put in your car if you want to go buy some oil at, AutoZone or wherever they sell it. But as far as the market went, a future is different than an option in that an option is one person with a promise, another person has a choice. A future is 2 promises.
Yep.
I promise to sell, you promise to buy. That means I'm going to take delivery.
Both sides are obligated.
Yeah, I have to take delivery. So when I made a commitment that I'm going to take delivery, one of you tell us how that works if it's harder to take delivery.
Well, yeah. I mean, if like you said, there's 2 promises. I promise to buy, you promise to sell. The person that promised to buy, they've committed to pay $50 a barrel or whatever the locked in future price was when they made that transaction. So fast forward, and oil prices started to collapse during COVID because nobody's getting on a flight, nobody's driving, and you see oil tumbling. And a lot of people thought, well, it can't go below zero, right? It can't. Is that even possible? Why would somebody pay someone else? Well, these people were speculating on the price of oil, but they had no means of actual delivery.
And that's a key, because you have speculators, you have genuine people who will go to Oklahoma. I think that's where it is.
Yep.
I can't remember the name.
It's Oklahoma, and that's where delivery takes place.
And so you're going to show up in Oklahoma where it's delivered, and then you put it on your truck, and you physically want the oil. You physically want to be in the oil business. So there's the people who I would call genuine in their dealings with oil.
Yeah.
Then you have all the people who are disingenuous.
They're just speculating on the price.
Speculating on the price, but they're not involved in oil. They're traders.
Exactly. They
never make up a huge part of this.
Oh yeah,
all
they
the money,
never want the oil.
None of the grease and
Yeah, and if you think about who are the buyers of oil that actually take delivery, well, I mean, airlines and all of these people that buy, but they didn't want delivery because
COVID shut everything down.
Yeah.
You're not going to fly, no planes, trains, or automobiles.
So all of these airlines no longer want to buy oil, and then the sellers still want to dump. So there's still a delivery that's taking place. And so people literally paid money to not accept the oil. They paid $20 and $30 a barrel. And so not only was it free, you could get paid to take the oil.
Well,
the problem is there was no storage.
Right?
Yeah, the tankers are full, the tanks are full, the pumps were going, and now this oil's going to spoil. And so, hey, I got room in my bathtub. I'll take some if you pay me enough, right?
That's right.
It was an interesting time. So, well, let's take a little commercial break.
Okay.
And when we come back, we'll talk a little bit more about how to get exposure to oil, and we'll revisit the instability of the Middle East and have a little fun speculating on what that might do to prices. Is this a time to be opportunistic? Is it time to stay the course? So after commercial break, we'll be right back.
I am learning a lot, and it's easy to understand. Andy is fun. Andy's very enthusiastic to watch. He makes it a lot simpler to understand. I'm really benefiting from everything that he's teaching. I think the most valuable thing I've learned from Andy so far is the fact that it's not scary and it's easy to do.
Anybody can do this with the right amount of education, effort, and willingness to learn. You can learn it too. Andy, thanks for making this simple. Thanks for making this fun. Thanks for pouring your heart into this. Thank you very much.
All right, we're back. Let's hop back in. So we've been talking a little bit about the history of the oil, the idea that there's this problem with delivery and supply, and it went below zero. The other one that I remember with oil was a long time ago was British Petroleum. And from that point on forever, BP now stands for?
Broken pipe.
Broken pipes. And it was crazy. So I'll tell you a little story. Like I used to, when I was a kid, I worked for a company that Warren Buffett now owns called R.C. Willey, and they sell furniture. I had so many jobs. I went through all these jobs with my kids, and I gave them like 50 jobs. Like, could you hold a job for more than a week? You're not even old enough to have all these jobs. They don't believe me. I had all these jobs. The worst one I ever had at R.C. Willey's was repo. I would go out on repo. And it's awful because, sometimes you got to get the constable if they're...
Getting them off the couch is
really
the
worst one where I couldn't do it anymore. The worst one I ever did is there was this single mom, and we literally took the milk out of her fridge, put it on the counter, and it was like,
took the fridge.
Yeah, I couldn't do it anymore. I couldn't do it. But the funniest one ever was we show up, and there's this lady who has her washer and dryer in the basement. And it's not a hoarder house, but borderline. And she goes, yeah, I knew I couldn't afford this. Look, I got to go. You guys just go down there and take it, and we'll be on our way. So we get down there, and I'm just a young kid. I mean, I don't even think I was 18 yet. I think I was 17. I don't know what I'm doing. And you got your two hot and cold water valves. So we grab the cold one, and the guy that's older than me, right? My partner can't get it unstuck. And so he goes out and he gets a wrench because he's going to crank it. pops it above the valve.
Oh no!
And we don't. She's gone.
You don't know where the water turnoff is.
We don't know. So I'm like, we're trying to tie rags around it. Trying to tape whatever we could find.
And he's sitting there with his finger in it.
Yeah, you can't hold it. Let me tell you, the pressure was more than you can hold. So I go look at. Right? So I got to go look and. Well,
luckily, that was the cold one.
Okay. So I go out and look. I'm looking in the whorehouse, and I found some snorkel gear.
See, you put the snorkel gear on.
I put the snorkel gear on and came around the corner, and the guy goes, "Not funny, Andy." So here you are watching this thing spew out water, and there's nothing you can do to stop it. I thought, what could be worse than that? Well, I'll tell you.
Yeah. Oil is a little worse than water.
So they break this pipe in the Gulf, and it just kept on.
Oh yeah, every day on CNBC, they would show it for weeks, and oil is just pumping out in the water, and every day you're just going, can nobody figure out how to get this turned off, please?
Where's the valve?
And nobody wanted that turned off worse than BP.
Oh, their stock went from 60 to 30, like that.
In an instant, yeah.
Cut it in half.
Well, it was dangerous enough that they weren't on the verge of bankruptcy necessarily, but if it was getting worse, they got fined billions and billions of dollars. And I think part of the only thing that kept them going was the fact that they had partners. So I remember like Anadarko Petroleum, and there was somebody else that also were mixed up in that. It was BP that got the negative headlines, but there were other companies that got fined and so forth.
But what that speaks to, and you never want to tell a $20 story to make a $1 point, which we just did.
Yeah.
But the
that was a $50 story, easy.
The snorkel gear alone.
RC Willie. You're throwing the
Andy
RC
and
Willie
snorkel gear.
Hey, I've got RC Willie stories that blow your mind. Warren Buffett never would have bought that company. You know why he bought it? I live in the state of Utah, and they had Zions Bank and First Security Bank were large lenders. There was a time where more people were in hawk to RC Willie than First Security Bank.
Wow.
They didn't quite overtake Zions, but that's how. And they were charging 20% interest, and they would sell their furniture at pretty much they break even. It was the financing that they made their money on. And it was brutal. The amount of people in hawk to RC Willie in my state was and I think Warren Buffett looked at that and said, that's a business. So anyway, the reason the BP story is relevant is it speaks to the strength and the resilience of that industry. Well, I mean, you can jack things up royal, billions of dollars in fines, and where's their stock price now? And here they go.
It happened to show up on our dividend payer list that we did in the Mentor Club this last week. We were searching for dividend payers, and on the list, British Petroleum.
So let's talk about BP. Let's talk about Exxon. Let's talk about Chevron. And let's talk about Corey's favorite and Warren Buffett's favorite and a bit of our favorite, Occidental.
Yeah.
Occidental. Before we get into specific investments, though, we talked about the ETF getting exposure to the price and ups and downs of oil. That's a very capital gainish type of attitude to try to speculate and guess long, short on oil prices.
Yeah.
We liked the UUP for a while because you could write on and condors on it and kind of get a sense of it. But as the contango got out of control, it just wasn't keeping pace. It got detached from tracking the price well.
Well, and it used to be a nice little instrument because instead of having to pick which oil company you wanted to invest in per se, you could just go with the ETF. Kind of like the SLV. Rather than try to pick an individual silver mining, I could just pick the SLV ETF. But again, the USO, it became, for me as a trader, it became dysfunctional, not just around the contango problem, but it also just the option premiums got really thin and sparse, and so better places to go generate income and premium. And again, owning a company like the list you just gave, Exxon, Chevron, ConocoPhillips, on down the list, Oxy, they all have, most of them pay dividends. I don't know if all of them do, but I believe most of them pay a dividend. And then they have your cash flow premium strategies are really functional on those.
Yeah,
I like I own Exxon rather than Chevron, and that's weird because Buffett is a Chevron guy. And for me, it's just the 41-year dividend, and I don't know if they're on the aristocrat list or whatever they call it, the dividend kings and aristocrats. And sounds like a multi-level. I'm an aristocrat, diamond level.
Yeah. I'm the dividend king.
Yeah, I'm the platinum level, whatever. But their track record has been phenomenal, and the dividends so nice, and the options are just fabulous on ExxonMobil. But make the distinction: we're not trading the price of oil. We're in business of selling it now, and that's a huge. Now you're not golden egg that changes with the price of gold. Now you're golden goose with how many eggs can you produce.
Well, and I've done a lot of speculating on oil and the futures and the oil companies over the years, just as a trader, kind of a trader mindset and seeking capital gains, either using the stock or the options. And I had a lot of fun doing it. And I had some, skinned my knee a few times. Had some, was able to make some victory laps from time to time. But as a comparative strategy, trying to track the price of oil. I mean, there's a seasonal cycle to it. It tends to rally in the spring, and I still go to that, and I use a little bit of leverage to try to take advantage of the seasonal, spring run, and then it tends to taper off the rest of the year, and then it kind of picks up again in fourth quarter, as you track the data. But as far as a kind of slow and steady, constant, drip of oil, drip of the income, is the dividend, and then those, being able to write a covered call on your asset.
I like the asset, or I like the industry. I like oil. It used to be that 87% of the world's energy came from fossil fuels a few years ago. This is don't hold me to this, people who write comments, but when Al Gore came out with the inconvenient truth and the environmental concerns, which are I believe there are legitimate environmental concerns. When you watch that oil coming out of BP or
how can there not be? Yeah.
How can there not be with the amount of cars we have? But what's crazy is today, like when the big movement started, I don't know the year, but when it started, it was 87% of the world's fuel came from fossil fuels, coal, oil, whatever.
I think it's now down to
84.
83. Yeah, it's
84.
Dropped 2% or something ridiculous.
So guys like Gates, they're talking about nuclear, and that's probably the solution. But I guess what I'm saying is the obsolescence risk of oil, I think, is low. You can sell as many EVs as you want, but if you converted everyone to an EV, the amount of coal you'd have to burn to produce that electricity, there's not enough hydro or wind to power that many cars.
And to be fair, they've gotten a lot cleaner and more efficient in the process of refining. They're not dumping it into places.
I just don't think it's an obsolescence place.
Right.
You're not in a place where you're gonna do that.
And it's one of those things where when you look at, well, my philosophy is from an investing standpoint, I'll never invest in USO, UNG, those that have that contango problem, the volatility ones. But you can invest long term in producers, in companies that produce it. So if you're going to get into oil companies, it can be Exxon and Chevron, or even refiners, Valero and so on. You can invest in those because they're producers of it. You can even invest in gold and silver through GLD and SLV if you believe, like I do, that it is backed by the physical, because gold and silver, they don't spoil.
Or
it doesn't have to.
Junior miners.
Yeah, or the gold miners and so on. And so I look at it from the trading perspective versus the investing. The only thing I would ever be willing to do with the USOs and those things is trade. I would never invest in them because of that negative drag. But as trading vehicles, they can be useful. And then you think about, if we're going to invest in oil, since there's not a way to invest in oil, the commodity, we have to use the producers. We have to, if you're going to invest in oil or natural gas, you really have to go.
Now I get stuff across my desk, though. Accredited investors, you can actually
could get into
buy oil.
Yeah, you could buy land or get
real
into
estate deal.
Yeah, exactly.
And there's huge tax advantages to that. And there's a great book called Money in the Ground. You can read. It's expensive.
Yeah,
if you can read that. And you have exploratory, which is high risk, and you have expansion, and then you have established.
But you don't have a product in the financial markets. Like those USO, they're not investable. And that's the problem. Where we can invest in precious metals long term, we can't really invest in that commodity unless we get into buying the land or getting in.
Yeah.
And actually, my mother-in-law, new mother-in-law, married my wife's dad. So she's not my wife's mom, but anyway, she does all of that. Like, they own land, they own production, they do stuff in oil. We've had land down where I grew up where we sell leases to companies. And so Encana, which is a Canadian company, actually bought leases from us to do natural gas and things like that. So there's ways that one could invest in things like that. But really, for most people, if they're looking at that
the retail
product,
investor.
it's those oil companies. And then it gets to, well, the big risk is that the world goes away from using oil. Well, Warren Buffett's on our side that it's not going away anytime too soon.
Let's talk about Buffett's Oxy. The technical analyst, you can see where he's buying it. You can see the support.
Yeah.
I believe you see the support when Buffett comes in and buys Oxy.
Yeah.
And he would buy the whole thing if he could. But he's come out and said, look, I'm not going to hostile take over this. It's not for sale. I would love to buy more, but I trust the management. He said, I want the management to fear me. He did the same thing when he bought the Washington Post for a while. One of the editors says, you have nothing to fear. He's a good owner.
Yeah, he doesn't do hostile takeovers. Every time they acquire a business, it's an agreement. Yeah. So he's not gonna.
And in fact, he pays a premium.
Yeah,
that's a big misnomer. People think Buffett's an insider. Certainly, he's had warrants, like with was it U.S. Bank?
Yeah,
in the
Bank of America, Goldman Sachs,
all that stuff. He had personal warrants, but he paid a premium for Burlington Northern. He's going to pay you.
Yeah, he does a couple of different types of acquisitions. One is he just wants your business, and he's willing to pay a premium. So like Burlington Northern was trading at 80, and he ended up agreeing 100. To pay 100 for the entire business. He does other little deals, and this is on behalf of Berkshire Hathaway. So if you're a shareholder, you love it. Yeah. But when there's a crisis,
notice how he pointed to himself. You know, when you're a shareholder.
Well, I am a shareholder. I love it. I love that Buffett's working for me. Yeah. I mean, you get the greatest investor of all time working for you. That's pretty awesome. But when there's a crisis, that's when he shines, because when the global financial crisis hit, all these companies needed money, and he looked at their balance sheets and he looked at the fundamentals and he said, okay, I'll back you. And he gave Goldman Sachs $5 billion, but it came with an agreement to pay X amount of interest and warrants with a locked-in price. They're like an option where he had a set price where he would buy the stock and have the exercisable right. So what it did is it gave him an additional kicker. If the stocks recovered after the global financial crisis, which, by the way, they did, he still got to buy the shares way, way lower than that recovery price on behalf of Berkshire Hathaway. And so he did that,
For people new to, options are a marketable security. There's an exchange. Warrants are more of a deal. So in that case, he's more of an insider, granted. But the bigger point is he's going to buy Oxy at the same levels, and you can see where those are. So
and think of the business model. You own the oil, and then you ship it on the trains. I mean,
he
owns five.
He's got the whole
to ship your Heinz ketchup to the
But no, I mean the one of the number one things we ship on rails is oil. Yeah. And anytime you see a political controversy around like a pipeline, just know that the railroad's on the other side going, down with the pipelines.
Yeah.
So it's interesting.
Yeah, but he wants it. I mean, business, right? It's just business opportunities. So he says, I want the oil that's coming out of the ground. I want to be a producer of that. And then I want to own the railroad that ships it places. And then I want to
own the electric company while I'm at it.
Exactly. I want to own the electric company. Yeah. He wants as much of, he wants Boardwalk and Park Place. He wants it all.
5% of the S&P, I think, is what they come up with. That 5% of the big global business he's in control of.
It's a big fish.
And I mean, you look at how smart he is with doing these deals. Like, he does them on behalf of Berkshire shareholders, but he did warrants with Oxy, which you described, Those are at $59 is the exercise price. So he has an agreed upon price. Now, he did this because he loaned them money.
Yeah.
And usually when Berkshire does a loan, they not only get interest on the loan, which is 8%. So he's getting 8% on his money plus a free warrant that gives him the right to buy millions of shares.
But he screwed up, and he wrote about it, I believe. He
Yeah,
screwed up because
he
he
did.
said, look, you can pay me in cash on this loan.
Or stock.
Or you can pay me in stock on this loan. So they had a bit of a cash crunch. So they started paying him in stock. He's like, oh, the stock. So he started selling the stock.
Yeah.
And then he started looking at the business. He's like, I should not have been selling that stock. That would have been better than cash.
Which you have to respect, that Buffett makes mistakes, but he fixes them, right? That's what you want, because you don't want somebody that makes mistakes and then tries to hide it and tries to like, oh, I don't want to look
he
bad.
Leads every letter with his mistakes.
Yeah. And I just love that he's open and honest and says, here's where we screwed up. They were delivering us shares, and we thought we don't want.
Them.
Yeah, we'd rather have the cash.
He's selling the shares lower than he's buying them today.
And then he realized in the recovery how good this could be for Oxy, and he went, we should not have been selling that, and he had to pay more, but he started buying the stock. And look, he started buying it in the 40s. Now it's like at 67. If he would have, most people would have gone, well, I shouldn't have screwed that up. So I can't buy it now because it's higher. Buffett doesn't operate that way. When he realizes he's made a mistake, he fixes it. And that's what anyone should look to do.
So when you look at, let's go full circle. When you look at the Middle East, what do you think that does to oil I mean, the Saudis, you have these things called lifting costs. It's the same as mining. How much does it take to get gold out of the ground and refine it? How much does it take to get oil out of the ground? And I think, don't quote me on this, I'd have to ask the Maselli brothers. But I want to say frackers are, depending on their operation, $40-50 a barrel for them to make it happen. And if oil falls below that, the frackers are kind of out of luck. Jed Clampett can shoot his gun shooting at some food, and up through the ground comes
bubbling crude.
Boy, that ages us.
Black gold.
Texas tea.
Oh my God.
Well, the next thing you know, old Jed's a millionaire. The Kim folks said, Jed, move away from there.
That just takes it
Say
to
California is the place you ought to be.
Oh my God.
So we loaded up the truck and we moved to Beverly
Hills, that is.
We're going to do the whole song.
I guess.
Now, I can't remember everything else.
I can remember Ellie, I can tell you that right now. Okay, so here's the thing. Now that we're old and we watch black and white TV,
anyone under the age
Corey
of...
looks like he's 18, and you say, I've been in the markets a couple of decades, and they don't believe him. We can bang out the Beverly
Hillbillies. That proves something.
Hey, just sit right back and you'll hear a tale.
Yeah. Oh my gosh. Let's just cut.
I'll stop right there.
Cut. Edit. So anyway, now you've got what we're talking about. So
the cost of producing the oil.
So the you shoot at the food, up through the ground comes bubbling crude. Well, Jed Clampett, if you do that in Saudi, I think you can put a straw in the ground at $7.
It comes out,
$7 or $8, less than 10 to pull it up. So they have a huge competitive advantage that it's more pure, takes less time to refine it, yada yada. And the Saudis, OPEC, they can mess with things.
Yeah.
So what's your take on the war and the conflict just in the general area? Does that make prices go up, or does it make prices go down because they're going to just produce? I mean, what do you
I mean, the general thought would be that it would make prices go up just from the risk of some supply disruption, right?
Yeah.
When bombs are going off. I mean, it was a few years ago where a bomb went into, was it Saudi Arabia, and it destroyed millions of barrels. And so you'll see some things where, I mean, obviously anything like that can really, in the short term, negatively affect oil. There is the possibility of more production, though. So it's a short-term risk. It's not a long-term risk. Let's say that Iran stops producing for the rest of the world. Well, it's just not that big a deal because other places can increase production. But in the short term, you can't just, snap your fingers and have more oil. It takes them a long time. It takes them multiple months to increase production. So you can see short-term risk where oil spikes, but usually longer term, others will step in.
But no, isn't it a drag on the economy, though, even if it's short term? Let's say you're this close to recession. Let's say you're tipping point of recession. Business, all that shipping, you want to build a house, where'd all those materials come from?
Yeah.
Oil brought it to your house, brought it to your neighborhood. With the food on the table, oil brought it to your neighborhood. And so
it's
high oil.
It's the mother of all commodities.
Yeah, higher oil prices are a drag on business.
Oh yeah.
And so, that's where if you see a conflict in the Middle East, to say, why do we care? There's ripple effects on that stuff for business.
Sure.
Well, and it's even deeper than that. The U.S. we're the largest producer of oil in the world, but even deeper than that, our currency is directly tied to the petrodollar. Yeah. And I mean, you go back to the early 2000s, 90% of oil transactions globally required the U.S. dollar.
Yeah,
that's jargon. Talk a little bit about what is a petrodollar.
Well, back when we went off the gold standard, what year was it?
78 or 72, 74?
70s. Back in the 70s.
How do I not know that? 72?
I want to say 72.
72.
Yeah.
God, I've quoted that 1,000 times.
Good old Henry Kissinger went and made a deal with the Saudis. We'll give you all the tanks and armory you need to defend yourself in the region as long as you sell oil in U.S. dollars. And that was the deal. And because of that, it's been a tremendous benefit to the U.S. Economy, the U.S. dollars. We've been able to do things like export inflation because if you wanted oil, you had to buy $1 first before you could buy your barrel of oil from anywhere. And then you have your OPEC nations, which is the oil producing. What is it? I can't remember the whole acronym off the top of my head. But it's all the oil producing, countries get together and they have the OPEC, and that really directly influences the price of oil supply globally. And they can turn the pumps on and off relatively easily at will. So if they don't like the price of oil, they can slow the pumps down. And if they want to flood the market with inventory, they can crank the pipes up. Shipping's another area. When the Suez Canal got blocked, the price of oil spiked more so than it did recently with the fire exchange between Israel and Iran. So it's certainly people pay attention to it. And one of the things I do is I watch the futures first, and then I decide if there's something that's worth chasing after news to see what happened. Because I used to try and chase the news and try to predict what would make the price of oil move. And that was hard to do. Sometimes it was not hard. Like British Petroleum, when the pipe broke, I'm like, oh, that stock's going down. Yeah. And there was short selling opportunities there. Knowing that there's a little bit of conflict is certainly one could speculate and say, well, I think the price of oil is going to go up because of that. I think seasonality is another big one that kind of comes in. So there's a handful of things that really do affect the price of oil. And for the speculators, again, you pay attention to the news. Now the news is not just tragic. It's like, okay, well, that usually means that something's going to happen here, and there's an opportunity to profit, and we get to do good things with that money.
OPEC is really smart about these little things that take place as well, because they'll try to drive down oil prices enough to decrease competition, right? So if they can pull oil out of the ground at $7, but they know in the U.S. it takes us 45. When we had the crisis, they kept the pressure on because essentially they were driving businesses underground, and they're reducing competition by doing that, right? They want to produce the world's supply of oil. They don't want people buying from Canada and other countries. They want to produce as much as possible. So sometimes they'll drive prices lower to get rid of competition. It's sort of like Walmart comes into your city and they drive down prices, and not to pick on Walmart or whatever, but get rid of all the mom and pop shops and then push the prices right back up. Well, OPEC will operate in that manner just the same.
So, three non-experts on oil talking about oil, but isn't it interesting?
Well, I'm not a non-expert, but I am a bit of an enthusiast. I've been studying this stuff for a long time, and whenever I look at things like global conflict, you hear the narrative in the news, and I'm like, well, what's the economic reasons behind this? Like, why What's the conflict going on with Russia and the Ukraine? It's a petroleum play.
It's over precious metals and commodities.
A lot of pipeline control through that
Pipelines,
area. A lot of natural gas pipeline control. I'll tell you another oil story that's kind of funny. I think of all those years I spent on the Rich Dad Advisor team. I think it was 13, 14 years I traveled before my kids are in an age where I want to be with them. Zach's a junior and David's a freshman, and don't have much more time with them. Marcy's illness influenced that. So I would come home. But in those days of travel, it was crazy. It was so much fun. And I remember I used to call Petro Brazil, I call them the Petro Brothers, because it was all cartel and all like the brothers. So anyway, Petro Brazil, they have probably the largest oil field in the world, probably. Yeah. I think I've read that. But the problem is their government was so corrupt.
They're so corrupt.
Just so corrupt. And the dividend on that thing, talk about getting risk along with the reward. The dividend on that through the roof. I mean, they've had 20% dividends before, I think. Yeah. Crazy. So anyway, it was right after they tried to clean house, and I was in Chile with Robert Kiyosaki. And I have these little moments where I think it's so weird, because when Marcy and I read the book Rich Dad Poor Dad, we didn't know Robert, just bought it like everybody else did in the 90s, I think it was. And, we're reading it, and, we should buy assets, Never imagined that he and I would meet or become friends or anything like that. So anyway, he's no more of a real estate guy. He doesn't do a lot of stocks, but he does do some. I don't know if he admitted in public or not. Yeah. But he, so we're sitting there in Chile, and he was talking about he has a broker that he calls to tell him to do stuff, and he bought some leaps on it because it was so cheap. I want to say the stock was like down to $5, and the leaps were like $1 or less or whatever. Yeah. So he bought some leaps, a bunch. And I said, Robert, you should sell some puts to finance your leaps, and so I kind of drew it out on a flip chart, as we were teaching and talking. So on our way back, everyone else had their flight. Robert and I on the same flight, so we're sitting there in the airport together, and he goes, "Hey, call my broker and tell him I want to sell some puts on this stuff." So I got his broker on the phone. I'm sitting there like, I kind of this thing like, if you'd have told me when I was reading Rich Dad Poor Dad that I'd be sitting in the Santiago airport with Robbie Kiyosaki with his broker on the phone talking about, I didn't even know what I didn't know what a cash secured put was at that time. I wouldn't even conceive of that. And awesome. It was just crazy, so. But Petro, and I started nicknaming them the Petro Brothers because they're all in the cartel together. Oh, yeah.
They're
Petro Brazil. Yeah,
ticker symbol PBR. Like the Pabst Blue Ribbon.
Be scared of that dividend because there's some risk with that thing, man.
And that speaks to risks of other countries. Like Chevron was operating in Venezuela.
Yeah.
And they had bought the assets. They had set up production. And then the Venezuelan government said, we're going to take those as our own, and Chevron had to write off like $5 billion loss or whatever it was. But it speaks to, look, when you operate in other countries and they just confiscate those assets, that's a real risk. You look at if you had invested in Russia and Russia invades Ukraine, well, what happens? Will those Russian companies ever be free to trade ever again? There's all these question marks when you deal, and that's part of the risks of people worry about investing in China. Well, will eventually China just confiscate those assets, or will they be allowed to freely trade? It's one of the benefits we have in the U.S. that other countries just simply do not have in some cases.
That just reminded me of that Russian ETF.
Oh, yeah, RSX.
The RSX that just stopped trading.
Yeah.
Do you remember that we sold some?
Yes,
we sold some puts.
That's what I was just laughing about.
We sold when COVID or what was it, when the Ukraine war started, we sold a ton of options in the Mentor Club, and I sold even more personally, thinking these are going to expire because they're going to get frozen.
Yeah, and
And
I
they did.
sold
They
some.
did.
I
And they
sold
did.
some personally and made money.
Yeah.
And then I sort of felt bad about it. And I remember we talked like it feels like we're making money off of like this war. And so
War and,
then I
you kinda-
donated it to UNICEF or something. Anyway,
that's
but-
a Rob Reinhold play.
Yeah.
Because Rob was short American Airlines on 9/11.
just by accident.
I don't want to
Yeah.
put words in his mouth, but I think it was 6 figures.
Yeah.
I think he had a 6-figure windfall because he was already short and had
Yeah.
puts on. I think he was speculating. He had no idea.
There,
when 9/11
prior to
hit.
9/11,
Then
there was
donate.
a picture
Yeah.
perfect bearish
yeah, there
descending
was.
triangle setting up.
Yeah.
And so, from a
lot of
technical
guys-
perspective, you
and
were
the
short.
CIA had to go look at every single person that was short to see if they had connection.
Yeah.
Yeah.
And I think, if I remember right, Rob just donated it all to the families. If I
Yeah.
remember, he's that type of guy.
Oh yeah, he's a friend of
Great
mine.
guy. Yeah,
for sure.
Oh, great guy. He's one
Yeah.
of the guys that when I first was messing with risk graphs, the dude would just he was like you, and back then I couldn't have drawn one without a computer. You know,
Yeah.
I can now, but back then I was like, how in the heck? I mean, he's just here,
Yeah.
just right in his head.
And now,
Great.
now you can see him in your head. You know, that's the
Yeah.
beauty of
Yeah.
education. You just do something. It's just repetition.
Yeah,
And that's
it's
why
like
we
the
always,
Matrix, Neo. Well, I
Yeah.
just see this and see
yeah,
this.
that's why we always tell people to go to
Oh,
yourinvestingclass.com
great! Yeah, great segue
so that
into the
you can
close.
start to see risk graphs in your brain as well.
There you go. Go to yourinvestingclass.com. Really a fun discussion on oil. You know, and none of us even consider ourselves an expert on it, but you do want to know a little bit about it. You have a great team. You know, I don't know accounting, but I know enough about accounting that when I talk to my accountant, we can speak the language. I'm not a oil expert. When I talk to the Maselli brothers, I at least get, you know, it's funny. I had a guy call me. You get these things come across your desk or whatever. And I had a guy call me, you know, with some exploratory stuff. And it's funny because they can smell financial education. Because
Yeah.
when I started asking questions, he's like, I'm going to get this guy's money.
Yeah.
He's like, this guy knows oil. And I really don't. But you want to be able to converse with your attorney without being one. You want to be able to converse with your accountant without being one. And you want to know a little bit about oil.
For sure.
Really a fun discussion to talk about all the,
Well, and it's a fun and fascinating topic that I think a lot of people are interested in. It helped me understand a lot of what's going on just geopolitically out there.
Yeah.
And it helps me understand, you know, what's going on economically. And it helps me understand things like cause and effect and then correlations that you'll see where I know that this price affects that price. And when you're able to start connecting those kinds of dots, because again, you've been studying and you understand it,
Yeah.
then there's opportunity. That just creates opportunities for you that you otherwise might not have seen.
Here's the best line on oil I ever heard. It's from Robert Kiyosaki. I got so many Kiyosaki stories, man. This is the best one ever. So Robert wants to buy Robert's a commodities guy, loves gold, loves oil, right? Loves that stuff. And we're at this thing years ago, and he had some dry holes. He had some highly speculative, and he goes, the dry hole is an asset. And Kim is losing her mind because she's the queen of cash flow. Like,
Yeah.
it ain't putting money. Like, what happened to putting money in my pocket and the liability taking money out of my pocket? That one took money out of my pocket. You can't call that an asset. So Kim is losing her mind because Robert goes, a dry hole is an asset. He said it's just like that. He's on the mic and everyone's in the conference goes, a dry hole is an asset.
That's
Kim's
funny.
just going nuts, right? And he goes, how's it an asset? He goes, we know where the oil isn't.
Yeah.
We know not to drill there
Yeah.
anymore.
Well, I guess that's
So good.
That's sort of good
Yeah,
because
you know,
at least
no,
you know
it's-
not to waste money
yeah.
there anymore.
No, Enron's an asset. I know I know not to trust Kim
Yeah.
Lay now. So you always have a silver lining
That's awesome.
to that. So that was quite a podcast. People had to endure the Jed Clampett song, and the best moment of this podcast
We can tangoed a
is
little.
no out of nowhere. Oil.
The 10 man.
So we sue for peace, and we wish for peace over the Middle East. Someday, maybe those guys learn to get along a little bit. But when there's money and there's oil, there's going to be
fights.
There are going to be fights over it. So with that, hey, we've been watching and listening to the Cashflow Academy podcast. Hopefully, we made this a little bit simpler, and we piqued your interest in learning more of your own study. You know, a great book called Money in the Ground. You can pick that up. It's hard to get. It's an older book. But you can also, as Corey said, go to yourinvestingclass.com, because here's the cool thing. No matter what it is, gold, oil, whatever, boils down to a chart, financial statement fundamentally, chart technically, got your cash flow strategies, manage the risk. That's why Warren Buffett can own things that make ice cream like Dairy Queen, and batteries and Duracell, and insurance from Geico. Just very, very crazy different businesses, fundamentals, technicals, cash flow, risk management. So with that, we thank you for watching, listening, and we'll see you next time.